There are a number of concerns weighing on top of the U.S. economy, and one of those that we focused in on a couple of weeks back was the Target and Walmart earnings. Now, these gave us a good insight into what was going on with the American consumer, as well as how these companies were getting squeezed due to inflation and then the increase in transportation costs to move goods around. The markets had a couple of weeks to digest that information. However, this morning Target once again is in the news, and it's causing a strong sell-off here in Target, down about 8% this morning, and it's weighing on the indexes as well. Target has changed their operating margin guidance for Q2 down from 6% to around 2%. They're also implementing a plan to cancel a number of orders, increase their markdowns to remove excess inventory, while at the same time potential price hikes to offset higher fuel and transportation costs, and then reworking their holding capacity around ports so that they can help deal with supply chain volatility. This news is not welcome for the overall market. And if we go back and take a look at Target, the low after the earnings announcement was right here around 142, 143 in this zone. And this morning, in an hourly chart, Target has fallen all the way right back down to that zone, actually made a lower low, though it looks like it's going to open a little bit above that zone. So all of this digestion of what has happened over the last couple of weeks has been given back, and it looks like Target could be posed for a fresh leg lower if it breaks underneath that 140 zone. Now, this is weighing on the overall market as well. And if we take a look at the structure of the market, there's one big concern that we've got here. Yes, we had a big bounce, but we did not take out this key 4,300 level. This is from the FOMC sell down, and this is the zone the market needs to get back above to put in a potential higher high on any sort of meaningful time frame. Instead, what we've done is we've rallied right back up into this congestion zone, which had acted as support in February and in March and once again in April before ultimately breaking down. This is now acting as a ceiling. This 4,200 level has been hard to get above. And if we're looking at this, we have been trading in between this about 4,050 to 4,200 level here for the last 2 weeks. If we see that downside break from this potential flag here, that would be a very bad sign because it would continue to keep the downtrend intact. We'd continue to have a series of lower highs in play, right? A downtrend is a series of lower highs and lower lows. We have the lower highs in play. We have the lower lows in play. Bulls are looking for that break above that 4,300 to negate that downtrend. And right now, pre-market here, it looks like we don't have a lot before the support here over the last 2 weeks, and I'm zoomed in on an hourly chart now, can potentially make that breakdown. So like I said, we're watching that 40 to 40-60 zone right in here as that area of support. A move under that today would be a very bad sign here for the market. So one other thing I wanted to touch on in this morning's video, and that is bonds. I'll zoom this back up and look at a long-term daily chart picture. Right, we've talked a lot about this important level from the lows of 2018. And when we look and see where we made our bounce earlier this year, it happened right at this point. Right? We got a bounce here really until the end of May. And when I talk about downtrends, look what we have still here, guys. We still have lower highs that are put in. So a lot of people thought potentially that concern that the market would have here on rates might be getting negated and we might get that move back up. But that's not how it's played out. This downtrend's still intact. We're right here on this level of support. Now for the bulls, what would be very good is for this zone to hold right here, because then you could potentially have a higher low, which would be a good sign. If we fall underneath 135, that would be a very bad sign. And again, we need to take out this 142.30 zone right in here to give the potential move to the upside. So bonds are at a very key level here. We got a lot of concern about the overall economy from the words from Target, which is trading right there on that major level of support. The indexes themselves are going to open right there on that support for the last 2 weeks. Today's going to be a big day. What happens here is really, really important. As always, I hope you guys found this information useful. If you got any questions, feel free to reach out to me at Mike Tedeschi at perspectivewealthplanning.com or 814-580-9881. I'll see you guys tomorrow. Take care.